Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on Dalal Street. I'm Suyash Maheshwari, and with me in the studio is Amit Ranjan. We have got lots to talk about over the next half an hour, but as always, let's begin with how the global setup is this morning. Amit, over to you.
Good morning, Suyash. I would say it is cautious uncertainty, the best term I can put together. We had highs till yesterday, greens. Today they are back in the red. Dow Jones closed in the red, in the negative at 0.42%. S&P closed in the red, in the negative at 0.15%. Nasdaq was marginally in the green, in the positive at 0.09%. Coming to the European markets, back in the red, Stock 600 closed at 0.19%. Hang Seng this morning has been trading in the negative at 0.54%. The silver lining is the Nikkei, which has hit a 34-year high. 34-year high on Wednesday, and is in the positive this morning as well, up 2.06%. Mixed signals, because one day we see the greens everywhere. Today most of them are in the red. So cautious uncertainty.
All right, cautious uncertainty as far as global equities are concerned, but not much to take away overall from the global setup. I was looking at the US 10-year bond yields. They have picked up slightly. They are hovering around the 4% mark still, but they are still a far cry from the 5% sort of levels that we had seen not so long ago. The dollar index has also moved higher. The dollar index, as we speak, is hovering around the 102.5 sort of levels, and this is largely buoyed by the prevailing negative market sentiment that is bolstering on the that is bolstering the demand for the greenback. Oil prices too have inched higher. They have extended to the gains that we saw yesterday of about 2% or so, and this is on the back of data showing that US crude stocks fell more than expected last week, though a bigger than anticipated build-up in product inventories capped these gains. But Brent crude, as we speak, is hovering around the $78 a barrel mark. Back home, Indian markets also kick-started the session mixed. All right, we have some visuals coming in from the vibrant Gujarat summit. Listen in.
So welcome the Honorable Governor of Gujarat, Shri Acharya Devratji, and Honorable Chief Minister of Gujarat, Shri Bhupendra Bhai Patel. Thank you. We shall commence the significant inaugural session with a patriotic song, Jai Jai Garvi Gujarat, which was written by famous Gujarati poet Shri Narmad. The song that highlights the rich heritage, culture, bravery, and achievements of the land of Gujarat will be sung by world-renowned Shri Kirtidan Gadvi.
गुजरातनी स्वर्ण भूमि पर उग्યું स्वर्ण प्रभात जय गुजरात ए जय जय हो गर्वी गुजरात तने वंदन गुजरात तने वंदन गुजरात तने वंदन जय जय गर्वी
From the vibrant Gujarat Global Summit that is going on in Gandhinagar. This is the 10th edition of the summit. But coming back to the Indian markets, we have kick-started the session a little unchanged, and Nifty is still hovering around that 21,500 mark. And as we speak, we actually saw an intraday correction and we had dipped below those levels. Nifty had tested that 21,450 mark, but we have recouped some of those early morning losses, and Nifty as we speak is down about 0.08% and is back above the 21,500 mark. The mid cap and the small cap indices both opened higher, but they too have taken to the profit booking, and Nifty mid cap 100, which by the way has been struggling with the 47,000 mark, in fact had been above it for the majority of the for 2024, has dipped below it, and we are seeing a significant cut of about 170 points from those levels. Nifty small cap is also trading in the red, but it's still holding above the 15,300 mark. Volatility has picked up. India VIX, which by the way dipped below the 13 levels, and this was a first dip in almost a month, has reclaimed those levels, and as we speak India VIX is trading somewhere around the 13.35 sort of levels. But with that, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial. Thank you for joining us this morning on News 9, Akshay. I want to begin by asking about this range that we have been talking about for the at least for the last 3 or 4 sessions. Nifty had been trading in a range of 21,500 to 750. But if you look at the action in the past 3 sessions, we had been making lower highs and lower lows. Is this a sign of a bearish sentiment taking over?
Good morning, Suyash. Well, look, I feel this is a breather which the market is taking for the January series, because November and December, the market has moved in exuberated zones. It's an overheated market, so it's naturally cooling off. We do not see any signs of reversal as yet. There are no panic signs on the street. It is just that the last couple of days have been a bit disturbing on the volatility front, because you have seen extended moves of over 200 odd points in the Nifty index, and even as a matter of the fact, the banking and the Fin Nifty index. Now we play by the levels. That's what I would suggest. Now 21,500 here has special relevance. Even if you look at the opening trades today, we have just broken below those levels, but are again managing to hold on to those support levels. So let's play with the range. It's a range bound market, as I understand. Still, there are no major panic signs as yet. Even if market were to break 25 to 500, it doesn't mean that there would be a major sell-off. It's just a temporary cool-off, which I understand, considering the fact that the markets have had a fab bull run in the last couple of months. So the levels to play for the Nifty: supports of 21,500, resistance of 21,750. No major disturbing signs of yet. Yes, it's a subdued month. Be stock specific. That's the flavor for the January series.
All right, be stock specific, that's the flavor for the January series. But also wanted to touch on the banking pack. After November and December's run, most of us were banking on Nifty Bank to drive the markets higher. But the segment has underperformed, like so far, at least in 2020. And this is after the valuations have looked reasonable. The sentiment was also turning positive. Why do you think we are seeing such, like divergence in performance and valuations in the Nifty banking pack? And what's your, view on the banking pack for this week?
For the bank index, yes, compared to Nifty, Bank Nifty has taken a slight hit. It's been an underperformer since the beginning of the January series. But broadly, if you were to look from a weekly technical chart structure, still I do not find any major disturbing signs or reversal signs of the bank index. It's just that, if you look at the way the bank index has moved, we have been much used to seeing strong upsides, and even small corrections are disturbing for us. That's the sense I draw. Otherwise, there is a very strong support zone at around 46,800 spot levels for the banking index. Roughly 46,800, 46,900 is where it can hold. Today is the weekly expiry for the bank index. So 47,000 should hold. That's my understanding, looking at the way the derivative data suggests for today's expiry. It will be a small gradual upside move, because, the momentum is lost. That's one key takeaway for me, both for Nifty and Bank Nifty. The momentum is lost, so it will take some time for the Nifty or Bank Nifty to gather its ground and again then stage a rebound, maybe in the second half of January. So it's a range bound market, no need to panic. I think eventually things should settle down and normalize as before.
Good morning, Akshay. I'll drive your attention to another stock that has been gaining and has touched a 15-month high almost touching 200, the 200 mark. That is FSN E-Commerce Ventures, the parent company of Nykaa. It gained for a fourth day in a row, gaining almost 15% and touched the intraday high yesterday of 191. Today it is, as we speak, it's at around 194. Now my question to you is, would you still give it a buy recommendation? What's the price target one can look at now for Nykaa? Still 250 around?
Yes. Firstly, the FSL First Source Solutions 190 is the current market price. But here, on a technical perspective, if you were to look at the broader or the weekly or the monthly charts, it is almost near the resistance zone of 200. Now, 200 would have special relevance if you are a short-term trader, because these levels were revisited in November 21, and after that, we did see some significant correction in the stock. So there is a good chance you might see some cool-off in FSL at the current levels. So fresh entrants in FSL might give this a miss at the current rate. I would be more keen on Nykaa as a stock, because here, the stock, if you look at Nykaa, it's a one-way rally for Nykaa. It's been 8 months of move, which has seen a very strong up move and setting up a base at 190. So yes, 230 to 40 should be on. Support is 180. Continue to hold fresh buy entrants. Wait for a slight dip. 185 should make it more, good from the risk reward payoff. So 180, 85 your fresh entry. Otherwise, hold this for target of 225.
All right, that's a view coming in from Akshay for Nykaa. But Akshay, stay with us as we'll be right back with you after a short commercial break.
It was my 14th birthday.
On birthday, daughter waits
Home missing father.
He was carrying a cake for his daughter.
49-year-old Birmingham-based
Indian diplomat vanishes.
He was grabbed and bundled into a car by 4 assailants.
KLA claims responsibility. Demands Kashmiri separatists.
Maqbool Bhatt's release.
Goli maro. Or bang.
And within 3 days, they shot him dead.
Abducted diplomat.
Found murdered in Leicestershire.
I said, who ordered to kill him? To me, he said, yes, I ordered it.
And he never came home.
Stop searching. Start streaming. Download the world's first news OTT, News 9 Plus, ahead of the curve.
Why is the state not looking at putting an embargo on that?
And the state has not been able to handle that part of its own responsibilities.
It's not the fiefdom of politicians. They owe it to the people.
Everybody is as good a citizen as we.
As a Telangana person, I will not accept his leadership.
What was worrying was the stories that were coming from the Congress that there was internal sabotage.
You can't straight away give 12%. There is no provision.
Exactly.
You need to do a lot of other things.
Yeah, just because they are tribal, everyone does it.
Wait.
That's my problem. How do ordinary folks deal with this? Think about it.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus. Ahead of the curve.
Welcome back. You're watching First Stick here on News 9, and Indian markets have actually recovered from the day's low. You know, we are in fact moving towards the day's high. As of 10 a.m. this morning, Nifty is sitting somewhere around the 21,540 mark. Now this is just about 20-25 points shy of the day's high, which is around 21,642. Sensex has also recouped most of its early morning losses, and as we speak, the index has moved in fact above the 71,300 mark. The mid cap and the small cap indices are still struggling. They are yet to recover from their day's low. Mid cap 100 index is about about 126 points shy of the 47,000 mark, a level which it had been hovering around for the majority of the last week and this week as well. The small cap index is inching towards the 15,400 mark. Volatility continues to spike. As of 10 a.m. this morning, India VIX sits about 2% higher above the 13.5 levels. But Akshay, I'll come back to you. The markets have been rather choppy. You know, one day we are down, the other day we are up. In a market like this, what would be your short-term trading ideas or short-term trading bets?
Yes, still I would be like to be on the buy side of the market. Now, considering the fact that in my opening remarks I said it's still a stock-specific market and momentum is yet there to be chased. So, a couple of stock recommendations which from the pharma space, I would be keen on Divi's Lab and Cipla. Divi's Lab already has staged a breakout and the momentum indicators should regain. That's the sense I derive looking at the derivative and technical parameters. I would recommend buying Divi's Lab at the current rate for a target of 4152 with a stop loss of 3895. Second trade is Cipla. Again, we did see a breakout a few trading sessions back. Supports revisited in the last couple of days. Corrective action again is a good stock from a momentum pickup front. Consider buying Cipla at the current rates. Target 1342 with a stop loss of 1262. And IT pack here somewhere I think is going to lead the sector-wise action because the results will kick off from next week. Here HCL Tech is a strong pick from my side, because the technical parameters are good, derivative indicators are suggesting buying activity. Buy HCL Tech for a target of 1497 with a stop loss of 1428.
All right, those are the 3 or 4 short-term picks from Akshay. Akshay, thank you for joining us here on News 9. Always a pleasure speaking to you. But moving on, as Akshay was pointing out, we are moving into the quarter 3 earnings season, and as always, it will be the IT companies that will present their results first, and the results are due to start from tomorrow. Amit, what are the key expectations from this time around?
As you said, they are expected to start from tomorrow. TCS being the first, they are coming out with their Q3 results on January 11th, that is tomorrow. Now the street expects IT companies' third quarter earnings to remain subdued, and there are quite a few reasons. We'll come to that. I'll just give a caveat here, remind viewers here that Nifty IT closed 2023 at a decent 24% gain through the year. Now the factors that one can watch out for in the Q3 earnings, there are 5 of them. The first one is demand, which is likely to be muted. That's what the street expects. Companies, because of seasonal adverse effects that have happened, weak discretionary spending and project cuts by clients. So these are the 3 main reasons why demand is expected to be muted. Top IT companies, be it Wipro, be it Infosys, they are likely to report a decline in QOQ and YOY revenues this December. Second one, of course, it was the holiday season, so is the furloughs, the leave of absence granted to employees. So there have been shorter working hours, lesser working days, so that's an obvious reason. The third one is revenue guidance. IT companies have been tinkering with their revenue guidance in the face of deteriorating macroeconomic conditions. Those are mostly global. And this trend is expected to continue. We know what is happening, and throw in the Suez Canal, additional effects that have basically shown up. IT budgets. That's the fourth trend. The street is not on the same page on this. Now, there are certain analysts who say that there is a continued impact of macroeconomic slowdown and high inflation in developed markets, and the tech outlook will basically look muted because of that. Others are positive that the West is showing indication of reduced inflation and optimistic indications from the US Fed. So they say that it will not be that muted IT budgets. They may just go up. And the fourth one, of course, with the recent developments at Wipro, is poaching. So the spotlight will also be on poaching wars between IT companies. So these are the trends. Not all of them look good. Why all analysts mostly expect Q3 earnings of IT companies across the board to be muted, basically.
All right. Let's also bring on Mr. Avinash Gorakshakar, Director Research at Profitmart Securities into the conversation. Now, as Amit pointed out here, this quarter is likely to be a weak one for, IT companies due to seasonality factors, higher than usual furloughs and weakness in discretionary demand. What's your take on the entire pack? What are your key expectations from IT companies this time around?
Yeah, good morning, Suresh. See, first of all, as far as the IT sector is concerned, as your colleague rightly mentioned, the third quarter numbers are going to be muted because broadly demand continues to be weak. And I think anyway, the third quarter is always considered to be a lean quarter. December is a very soft month for IT companies. So I think clearly, as it is, if you look at Infosys, if you look at, TCS, I think numbers in the second quarter were quite, bad. In fact, my sense is that TCS could show a sequential decline in revenue, and we could at best expect EBITDA margins to be maintained. But any improvement in EBITDA margins looks to be very tough. As far as Infosys is also concerned, I would believe that here also sequentially one could see a decline in revenue. And I think now the markets would be looking at, the kind of commentary coming out from these management, specifically in terms of new deals, in terms of new client additions, and obviously in terms of what kind of new products, specifically on artificial intelligence, machine learning, because these are the promising spots where demand continues to be quite promising. And another fact which could be interesting for your viewers, Suresh, is that, next year is going to be an election year in the US. Typically, whenever there is an election year, IT budgets get delayed by corporates. And I think that means the recovery for Indian companies, from the US markets would take a little longer. I would believe that, yes, most of the concerns are already built into the prices. But for a strong recovery to be expected, I think it could have to wait for at least the second half of the next calendar year. And that could definitely be a little tough. I think IT companies could remain lackluster for some more time. And I think clearly very few promising, outperformers could come in. I think although we are very positive on the mid-cap IT space, especially companies like KPIT, Persistent, but the large-cap IT companies definitely would continue their sluggish show as was seen in the second quarter.
And you mentioned that, the all eyes will be on the commentary coming out from these companies. Do you expect further cuts in revenue growth guidance this quarter, considering that discretionary spending has not really picked up in the US?
No, I think very much possible, Suresh, but I think broadly, I think, markets would be, if at all there are further revenue guidance cuts, from the large cap players, that is definitely going to mean a significant amount of derating for these stocks. Quite frankly, I don't expect any further kind of guidance cuts, but if at all they do come, then I think it's going to be even more bad. Obviously, from the large cap companies, order book inflow has been pretty slow. And as I mentioned to you, the coming year being an election year is going to be a more tougher year for these companies. So recovery is going to be very slow. I think my sense is that's the reason execution has been very slow in these companies.
Good morning, sir. You mentioned elections, and there are two big elections in two big economies this year, and they are staggered. One is in the first half of the year and the other one is in the very later half. So do you think it is only time to buy and keep right now, or it's just wait and watch for investors? Because it's a staggered election, they're not happening at the same time.
I think broadly, if you are talking about only the IT sector, Amit, then I think one can wait and watch. my sense is that there is no need to hurry for getting into IT companies, despite the fact that valuations appear to be attractive, but growth quotient continues to be uncertain. And unless growth comes back, I don't think these stocks are going to go up in a hurry. So my sense is, as far as IT is concerned, it's better to wait and watch and understand the commentary, understand the demand scenario, because as you mentioned earlier in your points, that the demand is weak, and I think it's unlikely to change at least over the next 1 or 2 quarters.
All right, that's the view coming in from Avinash. But quite a choppy bit of movement we have seen, at least so far, in equities generally in 2024. In 2023, if a sector was moving, all the stocks were moving. Is it time for us to take a more bottom-up approach, considering that a lot of these sectors, a lot of these themes have already played out?
No, I think it will be a bottom-up approach, Suhesh, because see, broadly, if you look at the index, my sense is the index appears to be slightly, pricey, very little, upside on the index level. But on the broader market, there are many sectors like real estate, capital goods, infrastructure, cement, auto components. I think there are many pockets of opportunity where one can take a bottom-up opportunity. And I think, markets obviously give you a good stock-specific opportunity. The earnings season, which is now going to start, from tomorrow, obviously will throw lots of opportunity. So I think it's going to be a bottom-up approach. You rightly pointed out that it will be more of a stock-specific bottom-up approach. And clearly, I think, domestic-facing sectors, I believe, would do well. The overseas export-oriented companies, I think still the headwinds continue to be quite strong.
All right, and I also wanted to get your view on the FMCG pack. Now we have had Q3 business updates from some of these companies, and it looks like it will be more of the same. In the first 2 quarters, we saw that rural demand was lagging. This time around, business updates and commentary coming in is also showing that it will still going to lag. And especially this time around, we were expecting a pickup in demand, considering it was festive season and the wedding season. What's your outlook on the entire FMCG pack, and when do you think this rural recovery will finally take place?
I think, Suhesh, looking at the business updates from most of the companies, I think one thing is very clear, that rural demand still continues to be weak. And I think that is going to be that volume growth is going to be quite minimal. And I think unless volume growth picks up in the FMCG segment, I think it is unlikely that these companies would be reporting a significant improvement in margins or in profitability. So my sense is, I think you would probably see a flattish quarter. Most companies have been trying to cut corners by cutting costs, by cutting overheads. But I think the real kicker is the volume growth. And that I don't think is going to happen till the month of February or March. I think possibly the next 1 or 2 quarters could be tepid quarters like the first half. And I think most of the valuations, across FMCG companies are extremely, expensive. So I would not be in a hurry. I would probably wait for another couple of months before we take a stock-specific call. But I think within that, Godrej Consumer, Marico, these are companies where I believe, current valuations appear to be good. But I think the risk-reward will happen only over the next 12 to 15 months.
All right, that's the view coming in from Avinash Gorakshakar. Sir, appreciate your time, appreciate your thoughts. Always great speaking to you. Thank you for joining us here on News 9. But before we wrap things up, let's also look at how the markets are doing, and they are still, hovering above the 21,500 mark as far as Nifty is concerned. We are testing the lows. Remember, in the last 3 or 4 sessions, we have been in the range of about 21,500 to 21,750, but we have been making lower highs and lower lows. In fact, today we broke below the 21,500 mark, tested 21,450 sort of levels, but the markets did bounce back from there on, and we are in fact now back above 21,500. Sensex also continues to trade in that range of 71,100 to 400 mark. Currently it sits above the 71,300 levels, and the broader markets now, they are showing some bit of weakness. They opened low. They in fact opened in the green and have been making lows since then, and mid cap 100 as we speak is down 0.44% at 46,763 mark, and the small cap index is also trading with a cut of 0.43%, but still holding above the 15,300 levels. Volatility continues to remain elevated. India VIX as we speak is up 2.03%. at 13.53 sort of levels. But if you look at the sectors, there has been a bit of a recovery. Nifty Bank, which opened lower, and by the way, remember, we saw a 700-point cut in the banking index yesterday. We are seeing a bit of recovery over there. Nifty Bank, as we speak, is up marginally, up about 0.05%, and other sectors that are adding strength this morning are media and IT, whereas your FMCG, metal and pharma stocks are witnessing some bit of a profit booking take place. But with that, it's a wrap on this edition of First Take. But stay with us, as we'll be right back on the other side with Business Plus.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha.